Governor, the chairperson asked you at the very start of the meeting what the cost of the bank guarantee was, and you said in net terms in the region of 40 billion. And I just want to tease that out with you. Was it, in your view, the guarantee itself that cost that, or was it the rescue of the banks that you're referring to? And I'll put that in
That's a very good point. That's a very good point, and thank you for correcting me on that point, because I should have made that point. It wasn't, and we're supposed to tease it out to some extent with Deputy O'Donnell, that it wasn't the guarantee, it was the failure of the banks getting into this mess, because it wasn't going to be ever possible for the Irish government to say, whoops, a lot of losses in the banks, but we don't care, because something had to be done for at least some of the banks.
Okay, yeah, I accept that. But even going further than that, in terms of the crisis management of the banking crisis, as you know, the guarantee itself was a 2-year guarantee. At the end of September 2010, you had about 40 billion euro of senior bank bonds came out of guarantee, and they were not covered by the ELG guarantee, which replaced the original one. Now, the fact that every cent of that 40 billion, some secured, some unsecured, but all unguaranteed now from September 2010. The fact that all of those had to be repaid, every cent, did that contribute to the overall cost of rescuing the banks?
No, absolutely. It's a very important point is people say, oh, the Irish government guaranteed the 440 billion. But it's only 10% of that was actually called. So it really matters which elements of the guaranteed amounts might not have had to be paid. And there was an issue, and I think we can discuss this at great length now, or I think when we talk about the bailout, around the what could have been bailed in 2010, and what might have been bailed in the context of the new regulatory arrangements in Europe, the BRRD, because the whole attitude in Europe towards bank failure has changed. So
2-year and 2-month period between the guarantee and the bailout, Governor. So I'd like to begin.
Nothing could be done.
Concentrate on the guarantee this morning.
Yeah. So, but I mean, I think your 40 billion that was there, for-ish billion unguaranteed, some of it covered, so secured, so they would have been paid. Others of them, most of it with, so it gets down to I think about 16 billion, and then a lot of that is with AIB and Bank of Ireland, and then you're down to 4 or 5 billion with Anglo and INBS. Those definitely you could have a big conversation about.
I suppose it's a pretty direct question. The fact that everything which was unguaranteed had to be repaid, did that contribute to the overall bill of rescuing the banks?
Yeah, but you might end up saying it's a 5 billion bill. Some people might say it's 10 billion, it's 5 billion. So these are huge sums of money, but they're again small in terms of the overall.
There were 20 billion of unsecured senior bonds that came out of guarantee at the end of September 2010. No, they weren't all INBS and
I think
Anglo.
It's 16 point something, but anyway, when it got down to what you could have talked about, and a lot of them were AIB and Bank.
Well, that's an opinion as to what you could have talked about. You know, many people would argue you could have talked about everything.
Yeah,
but if you're rescuing the banking system.
Well, but if that's my advice, in my opinion, you're definitely down to sums below 20 billion.
Okay. You make a point in your report about subordinated debt, and Deputy O'Donnell teased it out with you as well, and there's a clear criticism of the inclusion of dated subordinated debt. In view of the fact that heavy losses were subsequently imposed on junior bondholders to the tune of about 15 billion, what could actually have been saved if all subordinated debt was left out of the guarantee entirely?
Relatively little more, but
subordinated debt is, because we people watching.
Okay, so when the banks source their money from different sources, from depositors, from the ordinary plain people, they get depositors from big companies, but still it's the money that companies need to use, and they get deposits from financial institutions, from investment funds that are not needed on a day-to-day basis, and they also get bonds which stand in equal standing with the deposits, but they are required by regulation, by international regulation, not to rely wholly on this first tier of deposits and senior bonds. They are required to get some of their funding from risk takers, especially equity holders, but also they're allowed to cover some of that requirement with bonds that are explicitly stated that they will not be paid in a liquidation until all the senior bonds are paid. So they're an intermediate cushion of liabilities.
Okay. And you're also making the point about long-term debt. Are you referring to other senior bonds?
Senior
that
bonds
should not necessarily have been included in the guarantee?
That's right. Because they're there, bonds, you can't just say, well, I have my money back. You have to wait until the bond matures. So they weren't posing a risk on a day-to-day basis for the bank that they'll be pulled, like deposits could have been pulled. So it would have been very easy for the government to say, we're guaranteeing all the deposits and new bonds subject to approval. But the old bonds sit there, let's see what happens to the bank. Let's see how this plays out, and if need be, a bail-in. Under the new rules, pardon?
Would that have been credible? Would that have given sufficient confidence
all
to
of the other countries left out old bonds in their guarantees, as far as I'm aware.
Okay. Should Anglo have been allowed to fail at the end of September 2008?
Yes, I think certainly. Certainly, I don't. I think it should have been intervened. The management should have been removed. And that would have been more clear if they had known what the size of the problem was. But all the investment banks that looked at it saw that Anglo's business model was not credible in the market. It had run out of cash, and it had a big problem with its portfolio, which would have eaten through its capital, even though they didn't think it would eat through the senior.
And are you saying that decision should have been made even with the information available at that time? Or are you saying it with the information we now have about?
I think it should have been. I think that decision should have been taken at that time. Though I would have done I would have left it to the weekend to manage this situation in a way. Don't do it on a Tuesday night, and you would have used ELA to do that.
Okay. And then what? Liquidate? So you're not talking about a disorderly failure, as you refer to in the report. You're talking about a liquidation.
This is where the big issue is. In that environment, if Ireland, so Ireland got a bad rap for introducing a guarantee, but it would have been even worse of a rap internationally if they'd said, we don't care what you think, we're just going to liquidate it, and to hell with the bondholders. It would have been seen as the European Lehmans, and the government would have been pilloried. That doesn't mean they shouldn't have done it, but they would have been pariahs in the international circles. So what I think they should have done was to say, ELA, then say, we have this bank going down, we can't afford to guarantee, the risks are too big, you've got to risk share with us. If you want to wind this down orderly, you've got to put in European capital into this bank, and then we'll liquidate it down.
Okay. You say in the report that a disorderly failure of Anglo, which you said was systemic at the time, would have in all likelihood meant the other banks running out of cash within days. So you're not talking there about a liquidation, you're saying if the government had done nothing and Anglo just couldn't continue in business.
But it probably is also, that's what I meant there, but it's also true that any kind of bad news story, the other banks were close enough to the edge as well, and they probably would also have needed ELA. But actually, in the end, in 2010, they all needed ELA, so it's just postponing. It wasn't, it's not the end of the world. It's not good, but it's not the end of the world in a crisis like that if you have to give a bank ELA.
And Governor, what, in your opinion, is the main reason why those involved in making the decision and the authorities and the advisors did not know that Anglo was a busted flush, that it was insolvent at that time? Why did they not know that?
They didn't know that because they had not thought of the problem in the terms that I've described. Boom continues or bust happens in this bifurcated way, this bimodal way, that the bad would be very bad, and they didn't know in detail what sort of securities and collaterals Anglo-Irish Bank had for the lending. They didn't. Nobody really. It took a lot of detailed work. By the time NAMA started to buy these loans, they said these loans aren't worth very much because the collaterals aren't as good, because the personal guarantees of the owners are nothing like as strong as the banks thought they were. So people hadn't thought through the downside. Regulation is all about the downside. People say, oh, the central scenario is for a soft landing. It doesn't matter what the central scenario is. That's of no interest to the should be of no interest to the regulator and the central bank what the central scenario is. For regulation purposes, you want to know what is the downside and can we cope with the downside.
And should they have known at that stage that Anglo wasn't
could have done that. But were they doing the sort of...
Who should have known, Gordon? Who should have known?
The regulator should have known. Now, but it's happened in many other countries, just not on a larger scale. The regulator was following a type of approach which was, I think of it as the London approach. It's a sort of approach that was being adopted in the FSA in London. And they had big problems with their banks as well, but nothing that they couldn't absorb, whereas our one was far too big. It was a scale difference. And maybe, you know, at a certain point when the numbers got so big in relation to the economy, the wider systemic risk people should have said, I don't care what you say about the balance sheets of the banks and you say they've got enough capital. This must contain too big a risk. This has to be reined in.
And in your opinion, was there a genuine belief at that time that Anglo's problems were short-term in nature, cash flow, liquidity issues, the underlying solvency of the bank was sound? Do you believe, was that the genuine belief?
It seems to have been. It seems to have been, and I have heard no official of the central bank saying, well, actually, you know, to be honest, we knew they were gone. I heard nobody say that. Nobody. I think, of course, if you've been involved in supervising the banking system, it's very difficult to turn around and say, I think I've missed something here, something really big. So it was going to take a lot of evidence to convince them. Now, the investment bankers who came in, of course, very superficial, but they said, whoa, there's problems here. But they never said, none of them said, this bank is going to go down and it's going to cost X billion in over the capital. One of the notes that it's in the public arena, one of the notes says if the scenario is as bad as the scenario envisaged in this paper, then Anglo could burn through all of their capital. That was the worst scenario, they said. Though they acknowledged that there were further risks. And that's the problem with the guarantee, is the risks are open-ended.
When you talk about Monday, the 29th of September, on page 123, you say it became clear that Anglo could not survive another day. Was the position that stark? Was it that imminent that Anglo, without any intervention, was gone the following day?
Yes. In fact, the previous weekend, the projections, the day-by-day projections, indicated that they would be in deficit to the extent of 0.1 billion on the Tuesday, whatever day it was. When it got to the day before, they then thought they were going to be 1 point something short. So it was clear that they would not have enough cash, but that meant they would have to get emergency liquidity. Other banks in Europe were getting emergency liquidity.
Okay. In the course of preparing your report, did you come across any evidence or any example of anybody in the central bank or the financial regulator conveying a message to government, privately or publicly, in written or verbally, that, look, this is heading for disaster, the unsustainable model of lending that the bank are engaging to, the overexposure to one sector of the economy? Did anyone raise serious concerns and ring the alarm bells with the Department of Finance, Taoiseach, from central bank and regulator?
Yeah, it's a little bit like the Wolf story. Central banks go around telling people that, you know, really you have to rein in things. This is going to end badly. They tend to overplay that in good times and bad times. Be very careful now. The messages are broadly correct, but they have to be graduated. And there was nothing of the forget about all the letters I've sent you. This is really serious, and we're going to have to do something. But actually, you know, there were the powers. The central bank had powers to do things to stop themselves.
Yes.
So it's not a question of they should have told the government. Yes, they should have told the government. Now, you will find that there is a lot of documentation saying, look, I said here, this is a very risky situation. And there are those things. But the message did not get through because it wasn't communicated in a way that would have really rung the alarm bells. And I found a very interesting, in preparing for this session, I found a document on the PAC website that I hadn't noticed before, which is very interesting. It's not an important document. It was probably prepared by a junior official in the Department of Finance. It's not signed, but it's presented to the Minister on the 3rd of September. It includes this paragraph. The overall conclusions, this is the 3rd of September 2008, the overall conclusions of the Financial Stability Report of the Central Bank for 2007 was that the shock absorption capacity of the banking system left it well placed to withstand pressures from possible adverse economic and sectoral developments. While it is too early yet to anticipate the context of the Central Bank FSAI's report for 2008, so the advice being given, at least in this written document, to the Minister was capturing the relatively benign tone of a document which if that's the message that the Department of Finance were receiving from the Central Bank and communicating to the Minister, how could the Minister have expected that a decision like a guarantee was going to lead to this thing? I have the greatest sympathy for the people in the room, the political people on the night of the guarantee. I do not think that they, I know there's certain, but one should recognise that in the context of the advice that they were being given, the decisions they were taking are quite understandable.
You have said that there was a failure of regulation. Was that due to inadequate legislation?
No. I mean, obviously the legislation could have been improved and has been improved since then, but I believe that the powers were available.
Inadequate resources?
Inadequate resources devoted to regulation. That was a decision. It wasn't like,
the allocation of resources.
Allocation of resources. I mean, one of the things is a very, very striking figure here in my report, telling you how many staff were devoted to knowing about the particular banks. And there were 3 people who were on the Bank of Ireland team, and they worked also on, if I'm not mistaken, on Anglo Irish Bank. But anyway, you can see that. So 3 people, that's sort of ridiculous for 2 banks which, caused so much problem. So obviously we organise it a little bit differently now. We have, I was trying to say, how does that compare with now? Well, we have 5 to 10 times the number of people on this direct supervision of banks. And it was because they didn't, the approach was to say a well-governed bank is going to be all right because those guys have the incentive to make it run okay. And that's not true. Regulation is not just about making sure that the banks are being run in accordance with what the shareholders would want. The shareholders' interests and the state's interests are different.
Having said all of that, should we have been more prepared because there were clear warning signs in 2007 and in March 2008 of problems in the international banking system? Should we have been more prepared in terms of having resolution legislation prepared, ready to go in the event of what happened in September 2008 transpiring?
Yeah, resolution legislation is a good example of the people were making efforts, and particularly, you'll hear presumably from representatives from the Department of Finance. There was a lot of thought given to resolution legislation because in 2007, when Northern Rock trouble arose, the British authorities realised that they hadn't brought their legislation up to date, and they hadn't been doing things like developing countries are doing, putting in ways of dealing with insolvent banks through a special liquidation procedure and a special resolution allocation. They started to work on that legislation. So why didn't we do it? Well, the Department of Finance, in consultation with the Central Bank, said, let's do this. We should have. And the Central Bank said, Department of Finance, you should work on and the Attorney General said, well, that's all very well for the British. They don't have a constitution. But we have a constitution protecting private property. We don't think we could get the same legislation through here. So all these things were thought about, but they weren't brought to an adequate conclusion.
And did you come across any evidence of overt or covert pressure from political masters to those in the authorities responsible for regulating the banks, in the central bank responsible for prudential supervision? Was there an environment created where questioning of the model was unwelcome? Was there any evidence of direct contact where people were slapped down for raising issues, for raising questions and highlighting concerns?
So this is a very important question, and I would say there was one of the influences here was the fact in the legislation that the Central Bank was there to promote the financial services industry, development of the financial services industry, as well as everything else. So if some junior staff would say, I don't think this bank should be allowed to do this, and they wrote a letter saying, you shouldn't be allowed to sign so-and-so junior official, a telephone call would come to and this evidence was provided of this happening, would come to a senior official saying, we got this letter from, come on, and then say, well, these are very important firm, and we don't want to give the impression that we're over-regulating, and I don't think there's a risk here. So there was that kind of environment. I would have, of course, things like that will happen all the time. Things will be escalated. But what staff complained about was that it was done without, get the junior official, tell me about it. Let me understand, what can we do, what we can't do? It was more decision taken at the top. So there's that environment created, and the environment was, you say, is there political pressure? Well, of course, the government wanted the development of the system, of the financial system, and there's nothing wrong with the sound development but it created that environment for that. I also, I put a footnote into the report, footnote 12, because it does refer a little bit to the atmosphere around on the night of the finger right, and I talk about the idea that people were well liked in political circles. That was the closest I came to seeing something that you might have thought of that maybe they shouldn't have been made that aware of how close they were. But that was on an emergency night.
Final question, very quickly. Yeah, on page 7 of your report, you say, in an important sense, the major responsibility lies with the directors and senior managements of the banks that got into trouble. Now, it wasn't part of your report to examine the role of the banks, but is that your view, if you were to have a hierarchy of responsibility for causing the banking crisis?
It is my view, and sometimes, discussing with people, they say, well, are you entitled to have that view? Is that not just your personal view of the ethics of banking? But I don't think banking and finance can work without a high ethical standard, and a standard that says to top bankers, you have a heavy responsibility here. This is not money you're being given to gamble with. It's money you're being given which forms the basis of a huge underpinning of the economy of society. And vis-a-vis developers, they probably think, well, yeah, the bank did give us money to gamble with. It's a sort of different environment. So I do think there's a heavy responsibility, but maybe it's more an ethical than a legal concept. I would say one thing. And this inquiry will be looking into those dimensions of the banks, and of course, to some extent, Nyberg looked at that as well. And I often puzzled over it. How could it be? We all know that the senior bankers, I'm talking now not just Anglo, people who were very well regarded, very clever, able, serious people, solid people, honest people of integrity. How could they have got into this situation? And the conjecture that I am left with, and which you may wish to explore, is in the back of their minds, did they think, gosh, this could all go wrong, but if it all goes wrong, there will be a rescue. It won't be that bad. There will be a floor will be provided. The state will step in. The Europe will step in. Something will be done, and it will be all right. So even though they might have accepted subliminally that there were risks, they brush those aside, which of course gives you a kind of, and this is not the way they would have put it or even thought of it, heads I win, tails you lose. So that could explain why serious people said, we're making a lot of money here, we're distributing it to shareholders, we're generating the economy, and yeah, we're taking risks, but if the worst comes to the worst, it won't be too bad for us.
Very much is Professor Honohan and Deputy McGrath.
Thank you very much, Chair. Governor, in your comments today, you are advocating that at the end of September 2008, Anglo should have been liquidated, and you're acknowledging that that's with the benefit of hindsight, because that's not in your original report as the recommendation. Can I ask, in that scenario, what would have happened to the €52 billion worth of deposits that they had on their book at that time?
So that's exactly why on the Tuesday, how could you have coped with that? You would have needed to take some time because there was no plan. You would have to have worked out that thing. Now we know the framework, the European resolution framework, which distinguishes not just between guaranteed and
that wasn't there then.
It wasn't there then. So this is all. Could you have made this up in a matter of days? No. Even the clever people that were there couldn't have done it very easily. So it would have been very, very complex to do it. It was just that if you put that on the table, you could have enlisted the help of people who actually are our friends.
Okay, so it's not clear In that scenario,
No, what would
under
have
the
happened and how
circumstances at that
much
time,
we would have got away with?
what would have happened to the 52 billion of deposits? We can't be sure. Okay. Does it strike you as odd at the time that, given it was acknowledged that Anglo was about to go under the following day without any intervention, we had a bank with a balance sheet of 100 billion euro at the end of September 08, that a call wasn't made to Europe, that a call wasn't made to the ECB to say, look, we have a major problem. We think it's a short-term liquidity issue, but it could be much more than that. It's far too big for us. What should we do? What's your advice? Are you willing to get involved? Do you find it odd, or perhaps normal, that that call was not made?
Well, I only can say that when similar situations emerged in the course of 2010, I made it my business to give as much advance notice where things are going, what things might happen as possible, months in advance. This is where we're going to be at the end of September. It's not looking good. There could be, yeah. So.
Okay. This issue of senior bonds and deposits being ranked equally in law, pari passu, the term you used earlier on, how much of a complicating factor would that have been at the time if you were trying to separate out good bank, bad bank, separating deposits from bondholders? This is an issue that was put forward during the course of 2009 and 2010.
This is what you might have been able to have ready if you had resolution legislation in place. Because then you could have said, actually, in a failure, the first people to be hit after the subordinated debt holders will be the senior bonds or some category of a creditor like that, and then afterwards the depositors. There's nothing holy about depositors relative to bondholders. Very large deposits. Some of these banks had deposits from entities, international entities, of hundreds of millions of euros. So the distinction between depositors and bondholders was not clear, precisely because they were pari passu in law. Somebody said, well, I'll take a bond. Oh, no, actually, I'll put it as a deposit. It didn't make much difference to them. So this distinction between deposits, and that's why I was saying, let's not demonize the bondholders. It's kind of in that environment where they're pari passu, it doesn't really.
Just if I can clarify one issue on the net cost of the banking crisis in terms of direct state support. You're putting a figure of 40 billion on it, which is quite different to what the government are indicating, in that the indications are that all of the monies put into the surviving banks will eventually be recouped, which would leave you with a bill for Anglo and IMBS of somewhere between 30 35 billion. You're putting a figure of 40 billion. Can you account for that?
Well, I think the Minister has had an article there recently. I think he's hoping for improved prices as the banks recover, and that he'll get more from selling the shares and so forth than is actually priced into the valuations. I think that's the main source of difference. You also, to do these calculations, you have to bring them back to a certain date. You have to be very careful about adding and subtracting interest. It can be double counting, but the main difference, I think, is probably, or the main
is about assumptions.
Is about assumptions about the future return to increased share valuation of AIB.
Okay. Just one thing that struck me from your report, and I think it paints a picture of the time, that in the first 9 months of 2008, it's on page 119, you list out the dividends that were paid by the main banks, amounting to 1.25 billion euro paid out in the first 9 months of 2008, including on the 26th of September, dividends of 270 million euro on the 26th of September 2008. So 4 days before the guarantee was put in place, they were paying out 270 million euro in dividends. Have you any comment to make on that, or any observations?
Well, and we know, well, of course, I'd make two observations. Which one is, some of those dividends were, a lot of them, going to Irish middle-class people. The other thing, the argument that would have been made, if it had been proposed to block dividends in the early part of the crisis, the argument I'm sure that would have been made was, oh no, this will worsen our situation. If we stop paying dividends, this will cast a doubt over our banks. I'm sure that argument would have been made, but this is all part of not realising and not dealing with the situation, which was much more grave.